Hi and welcome to Golden Larch Investing. My name is Liam, and in today's video, we're going to be telling the story of Pembina Pipelines, an interesting case study in acquisition and expansion. As I've studied this company over the last few weeks, I decided to break this story down into a few eras, starting in the 90s and moving all the way to today and into their potential future. If you find this video or find this format interesting, please let me know in the comments and let me know what other Canadian companies would be interesting to break down just like this. All right, let's start right at the beginning. Pembina Pipelines was founded in 1954. They ran a single oil pipeline from around Drayton Valley, Alberta to the province's capital in Edmonton. This core pipeline was incredibly profitable for the company, and by 1978, they'd shipped their billionth barrel of oil. This strong and profitable asset allowed the company's executives to turn their attentions outwards, and as time went on, their gaze turned north. This leads directly to the second era of this company. This is the 1990s, what I called their first expansion era. In 1991, Pembina Pipelines acquired Peace Pipeline. This was their first major acquisition in their history and allowed them to massively increase their reach. Peace Pipeline ran operations up into new areas of northwestern Alberta and into northeastern British Columbia, putting Pembina in an incredible position, being able to integrate this area into their core business, which holds an incredible wealth of hydrocarbon resources. This acquisition and the continued profits of the company throughout the 90s clearly excited company executives, as within the next 10 years, they had acquired half of the 250 kilometers of the Bonnie Glen system in central Alberta, and then purchased Federated Pipelines Limited. They ended the decade with a capacity of 550,000 barrels a day with over 7,000 kilometers of pipes. This leads to the third era, which I call the diversification era in the 2000s. As the 2000s arrived, Pembina seemed on top of the world. Their pipeline spanned a large chunk of the province, and their profits gave them the opportunity to diversify their business a little. In 2001, they purchased Alberta Oil Sands Pipeline for $225 million. This gave them access to huge customers like Imperial Oil, Conoco Oil, and Petro-Canada. To support their expansion in this direction, they also purchased a large ethylene storage facility in Fort Saskatchewan, just northeast of Edmonton. Then there was their New Horizon project connecting Canadian Natural Resources operation north of Fort McMurray and increasing their transportation of oil sand crude up to 775,000 barrels per day. This massive expansion into the oil sands business greatly diversified the kind of product they were moving, allowing this company a little bit more flexibility. But it doesn't seem like the executives were satisfied with this. So in 2009, they acquired the Cut Bank Complex, which is a system of natural gas gathering and processing facilities along with pipelines, for $300 million. This expansion into natural gas essentially wrapped up this era of diversification. They now had massive investments into the oil sands, they had a strong natural gas business, and the future looked really bright for them. Leading us to the 2010s, which I call the rapid expansion. In the 2010s, Pembina looked to become an even larger and more concentrated force in these key industries. Now they had investments in all of the key areas of Canadian petrochemicals. They looked to be much larger and to acquire large rivals that would allow them to grow market share and dominate key sectors or regions of this industry. In 2012, this showed in the acquisition of Provident Energy, allowing them to increase their natural gas extraction and processing, and it cost the company $3.2 billion. This wasn't even the biggest acquisition of this era. That came in 2017 when they purchased Veresen Incorporated. This was a $9.7 billion deal, which is not too far off doubling Pembina's market capitalization. It's added some really key assets such as the Alliance Pipeline and expanded Pembina all the way into the United States. This acquisition meant that Pembina was now the third largest pipeline corp in Canada and allowed them to really call themselves a strong, integrated midstream company. The era of massive expansion ended with the 2019 acquisition of Kinder Morgan Canada and the Cochin Pipeline, another $4.35 billion that added this pipe that ran all the way from Fort Saskatchewan all the way through to Windsor, Ontario, through the United States. With all these deals done, Pembina had spent $17.2 billion and had grown the market capitalization of the company to about $27 billion from the $3 billion it sat at the beginning of the decade, with shareholders seeing an 84% increase in share price along the way. So now we get to the 2020s, and I call this their consolidation era. Because as the 2020s came along, Pembina seemed finally satisfied with these massive expansions that had allowed them to rest a little bit and focus more on this era of consolidation. Without stating the obvious, the first year or two of this decade was pretty stagnant for any business that didn't operate entirely online. But in 2022, they combined processing assets with KKR to create the Pembina Gas Infrastructure Joint Venture. Finally, earlier this year in 2024, Pembina acquired Enbridge's interest in the Alliance Pipeline. So this consolidated Pembina's ownership of this key pipeline and cost only $3.1 billion, which is a long ways from the almost $10 billion acquisitions they made in the previous decade. After all these decades of acquisitions and expansions, Pembina today is worth about $32 billion. They truly were able to acquire their way to the top of the Canadian oil and gas industry, and they sit at the table amongst giants like Enbridge. They serve massive oil-producing giants and are set to benefit more and more and more from expansions in demand in Canadian natural gas and production as time goes on. From this perspective, everything seems really quite awesome. This company has done nothing but grow and expand, and you might expect their shareholders to be thrilled with the process. However, there have been some challenges along the way. The main challenge being dilution. Without going into too much detail, shareholders have been diluted again and again, just about every time Pembina needed the money and could not take out a loan to make a new acquisition. They also suffered from a pretty high debt load, which has presented lots of risks over the years as each acquisition needed to be a success for shareholders to see a return from their efforts. This has led to somewhat lower return for Pembina shareholders compared to their industry peers. If you take a look at this graph, for example, over the past 5 years, shareholders have seen about a 17% increase in stock price, which is a tough contrast with the 60% seen by overall oil and gas industry. Even when I include the dividends here, Pembina shareholders miss out on a significant chunk of what their fellow oil and gas investors have seen. Now let's talk about their future. When looking to the future, there are a few things that might potentially indicate where this company is going in the future. The elephant in the room for most pipeline companies right now is, of course, Trans Mountain. This expanded pipeline is currently owned by the Canadian government and is scheduled to be sold off to commercial and Indigenous ownership at some point in the vague future. Trying to understand this pipeline and its challenges and opportunities is worth an entire video's worth of conversation, so I will have to be brief here. But to understand where Pembina plays a role, we need to understand a few key things. Without going into politics here, it's impossible to not point out the Trans Mountain Pipeline ended up dramatically over budget, costing the taxpayer about $34 billion. Now, some experts believe it will end up being worth it for the Canadian economy in the long run, allowing Canada's vast reserves of hydrocarbons to be exported to other markets, increasing demand and price of the currently quite cheap Canadian oil that has traded at a steep discount to WTI for decades. However, the government's overspending might cause some serious issues when trying to sell this asset to the private sector. The government will be looking to make back as much as possible from this investment, and as of today, it doesn't look like private corporations are willing to spend that kind of money. Even Pembina themselves politely bowed out of this contention, with the CEO saying it was not something they're spending a lot of time on right now. From the perspective of these companies, there will need to be some serious negotiation and discounting for them to be interested in this acquisition. But if a government or a potential future government was willing to do the work, Pembina would be a pretty ideal candidate to take ownership of this crucial asset. They have a long history of acquiring and integrating key infrastructure just like this pipeline, and they already have key partnerships with Indigenous groups that might just mean they can meet the government's goal of Indigenous ownership. I obviously can't be sure the company would do this, or if shareholders would benefit all that much in the short term, but long term, this could be a pretty exciting opportunity for Pembina to continue their history of expansion. That's the past, present, and future story of Pembina Pipelines. This company really managed to turn their assets into opportunities and have some really interesting opportunities to continue their expansion and growth for the foreseeable future. If you enjoyed this video, please leave it a like and subscribe to the channel. We talk about stocks and the economy every week, including our recent story about the upstart bank that is looking to completely revolutionize the Canadian banking industry.